It's time now for Mortgage Matters with your host, Bill Sandvig. Bill Sandvig serves as market leader running the South Carolina coast for Movement Mortgage. Movement finished 2014 ranked as the #1 mortgage company in purchase mortgages for the Charleston Tri-County area. And they're still growing. And now your host of Mortgage Matters, Bill Sandvig.
Hello, Charleston. This is Bill Sandvig with Mortgage Matters. Thanks so much for joining us this weekend. A big weekend in Charleston with the bridge run in town and a lot of out-of-towners, a lot of traffic, but always a great event. Some great weather this weekend. So I am excited to have Andrew Muller of Mappus Insurance in the studio with me today. Andrew?
Thanks for having me, Bill.
It's always great to have Andrew on the show. I don't know anybody that knows flood insurance and just homeowner insurance, property and casualty like you do. I have learned so much from you over the last couple of years. We've been working together, and it is always a treat to get another opportunity to learn from you and also to have you educate the listeners. So thank you so much for being on the show. Today we're going to be talking about just a couple of mortgage myths that are out there, some finance myths. We're also going to tap into some real big changes that are going on in the flood insurance market. And so one thing that I hear as far as a mortgage myth, and this myth has been around ever since the mortgage industry fell apart and guidelines started tightening up back in 2008, is banks aren't lending money. I can't get a loan. That's the wording that I hear all the time. And I mean, Andrew, have you had people come to you? Have you heard that on the street? You know, man, it's just too hard to get a loan these days.
I've heard it.
Yeah, I mean, the conception is out there that banks don't want to lend money. They're too nervous. They're too scared. And the reality of it is, it's just not the case. What happened in 2003 to 2006 is that lending guidelines got too loose. And so it's not that now things are tighter and banks don't want to lend. It's that we had shifted way too far to one side of things where the mortgage industry was just giving out money too freely. And so companies might have gotten, or people, the public got too familiar with that or got too used to that for that 5 or 6 year stretch when there was crazy products out there like no income, no asset documentation loans, stated income, stated asset loans. Now, I don't know if you know what a stated income, stated asset loan is.
I'm not quite for sure now.
So stated income, imagine this. There's no verification of how much money you actually make. There's no verification of how much money you actually have. So that's stated income, stated asset. And all you have to do is come into a mortgage company, and if your credit score is above a certain threshold, and here's the crazy thing, what would you expect to just trust someone about what they're telling you their income is and what they're telling you how much money they have in the bank is? What do you think would be a credit score we're going to say we feel comfortable with that?
I mean, I would think over 700.
I mean, 700, 750, 800, perfect credit.
Yeah, certainly high. You'd have to be high.
It slid down into the mid sixes. So people with below average credit were going in and saying, I make $200,000 a year, and I know you don't need to see my W-2. I know you don't need to see my pay stubs, but I make $200,000 a year, and I've got $100,000 in the bank. Now, a mortgage lender could say, great. Well, if you earned $250,000 a year, then you can buy the $1 million house that we're looking at. But since you only make $200,000 a year, you need to look at $750,000. Would you like to restate your income?
Wow.
I mean, think about.
Is that what was actually happening?
That was the can of worms that was open.
Oh my gosh.
Now we hope that we like to think there weren't lenders out there that were just telling people how much you have to make to buy the house you want to buy or the second home you want to buy, but that's just the case. I mean, when you have people that have their livelihood on the line, trying to make as much money as they can in a commission-only industry, these unregulated loans created ridiculous opportunity for taking advantage of the system, for people putting themselves in bad spots. And so that pendulum has swung to be so loose in the lending guidelines, and people got used to it. If you think back 25 years, the lending guidelines and the requirements for documenting those guidelines are very similar to what they are now. And so it's not that the banks aren't lending, it's that the rules are back. I like to tell people, look, getting money these days, it's not about anything other than documenting an accurate loan file. If you have an income, we're going to verify it. But if you have income, everything else can be fixed. So to say you have marginal credit or poor credit, or you just had a short sale, or you just had a bankruptcy, there are programs out there that allow for those kind of purchases still. There are programs that allow for you to get back into a house in as little as 12 months following a derogatory event like a bankruptcy. So they're out there. It's just the difference now is that we are documenting. The game, the industry is no longer a how many people can I get in the door to buy a loan, but it's how many people can I properly document to get a loan. And so the very first questions you start to hear when you go in to buy a house is, what's your mortgage payment? I'm sorry, not mortgage payment. What? Give me your W-2s. Give me your tax returns. Give me your bank statements. It's all about documentation these days. And then what has happened is to make sure that this stated income, stated asset, and that the lending institutions are protected is there are specific rules for what constitutes a valid document. So, for example, a bank statement. If you were to come into my office and I said, I need 2 months of bank statements and I need W-2s from the last 2 years and I need your last 30-day pay stubs and your tax returns. Well, not only is there a specific request, but there's a specific way to meet that request. You can't just go on and print out a transaction history from your bank statement. It has to be a full bank statement.
Okay.
It can't be a screenshot. It can't be missing pages. So a lot of the frustration that people talk about and people are experiencing in the lending world these days is not necessarily the fact that they can't get a loan. Mm-hmm. It's the fact that they are not used to the regimented experience of getting a loan. And my team spends, I have 3 assistants on my team, and their job is to be coaching people through getting all this paperwork together, and not only getting it all together, but getting it all together in the correct format. Mm-hmm. And people get so frustrated with the experience of, I thought I sent you that. Well, you might have sent that form in, but you have a 9-page statement here, and we only have 7 of those pages.
Or it was the statement. It's too old now, so you need a newer statement.
Exactly, documents expire. Yeah. So it's very definitely a common thing for people to feel that banks just don't want to lend to me. That's not the case. The rules are there. The rules are allowing people to get money. We're doing lending. My company's doing lending all the way down to 580 credit scores for FHA loans. Someone with a 580 credit score, it's pretty easy to get to a 580 credit score. If you don't have a 580 credit score, it's probably because there's some active things going wrong in your financial life right now, and those things can usually be fixed relatively quickly. If it's an active late on a credit card statement or an active collection, there's always a solution to be worked out with these types of products. And I don't want to continue to harp on that too much, but I do want to tap into what are some of the ways that you can get over and get around all these hurdles that we talk about, all these challenges of the documentation and credit issues and credit history, and what's the best way to overcome some of those problems that have led to a myth such as that banks are no longer lending, mm-hmm. that money is no longer being lent. And so when we come back from the break, we're going to talk about the ways to get past some of these challenges and to talk about how you can be smart to getting that loan and being smart about it. So when we get back, we'll talk about it. Thank you.
There's more Mortgage Matters with Bill Sandvig coming up next on The Big Talker, 1250 WTMA. WTMA. You're listening to Mortgage Matters on 1250 WTMA. Once again, here's Movement Mortgage's Bill Sandvig.
Welcome back to Mortgage Matters on 1250 WTMA, the Big Talker. My name is Bill Sandvig, and if you ever have any questions for me about mortgages or finance, and you can reach out to me absolutely anytime. My direct line, 843-300-7870. Or you can find me on my website at www.lowcountrylending.com. And I'll be happy to address absolutely any questions you might have about mortgages. I also have in the studio with me Andrew Muller of Mappus Insurance. Andrew, where can people find you?
Well, the best place everyone can go to is our website, which is mappusinsurance.com. And Mappus, Mappus, insurance spelled out. And our office line is 763-4200.
Thank you so much. We spent the first segment talking about one of the myths in mortgage lending these days, which is that banks are not lending money. And I wanted to talk about, we talked about some of the hurdles, about some of the perceptions about why people feel that way. And one of the things that keeps coming up is people are comparing, we talked about how people compare 15 years ago to how the lending guidelines had gotten so loose to today's where the money is still there. Banks still want to lend money, but the rules and the requirements for documenting things like income and assets are very specific, very regimented, very detailed, and there is no gray areas about it. People think, well, there's an underwriter out there making a decision about whether or not they want to lend money. It's not that simple anymore. It's in some ways it's simpler because those guidelines are so black and white that either you fit in the box or you don't fit in the box. Now, the question is, how big is the box? I would argue that the box is actually very, very large. And my company, Movement Mortgage, we go all the way down to 580 credit scores. That is over 90% of America has greater than a 580 credit score. So that's a pretty big box.
Yeah, you can pretty much help anyone.
I mean, pretty much anyone. And we also have programs out there at Movement Mortgage that allow for people to get back into a house 12 months outside of a bankruptcy, 12 months out of a short sale, 12 months out of a foreclosure. There are programs that allow for people to get back into a house that fast. That's a pretty large box. Now, what I want to talk about is knowing that the guidelines and the requirements and the documentation are very, very specific. How can buyers overcome that? And what I would recommend is start early, start local. Start early, start local. You cannot start planning early enough or too early for something like buying a house or getting a mortgage. The earlier you start that process, the better.
I would say, especially in today's market with real estate going so quickly. I mean, if you want a house, you have to be prepared to put an offer in on that house, and you can't start that process, that underwriting process right then.
Oh, without question. I mean, realtor partners of mine talk about that all the time. They talk about how clients are reaching out and saying, hey, I'm interested in these 10 properties. And they say, oh, okay, great. I'd like to get you more information about that. And, when can we go out and look at them? Well, my lease doesn't run out for 4 months. Well, guess what? In today's market, those 10 houses aren't there.
Good luck.
Those 10 houses are gone the next weekend. Mm-hmm. So when you're 4 months out, 6 months out, a year out, that's the time to start. It is time to start talking to a real estate agent. Get them on, you get yourself on their call list. But you need to get talking to someone who can help you secure your financing. There are so many people out there, especially young adults, who maybe first-time home buyers that think they can't buy a house. They're just convinced, they've bought into the myth that banks aren't lending. I'm not old enough. I don't have enough credit. I can't buy a house. I tell people this catchphrase or this line all the time. I can't fix income because I can't give you a job. But if you have income, everything else I can fix. It's just a matter of time. Do you have a bankruptcy? Do you have credit card lates? I don't care what it is. I can't fix income, but everything else I can fix. And to some extent, I can help with income because I can help you plan for it. If you're a server and you're in the food and beverage industry, I can help coach you to what you need to earn to qualify for the house you need to buy. Because people have a tendency to write off as much as they can on their tax returns. Mm-hmm. Well, when you do that, when you write off everything that you can on your tax returns and avoid paying taxes, well, that's also going to avoid you buying a house. Self-employment people run into this all the time.
Yep.
They've rolled everything that they do all within the letter of the law in through their business, but they've reduced their income. And when they reduce their income, they reduce their qualifying income. It's a perfect example of how time and reaching out early and planning for that purchase can be so valuable. And so what I would recommend to people is reach out to someone like me at 843-300-7870, my personal cell phone. Call me anytime, and I am happy to start laying out a plan, start laying out the groundwork for you to get into a house. Now, the second thing is use someone local. Use a local team. I can't stress this enough, especially in the Low Country, in Charleston. Real estate has specific needs, specific things that impact the real estate market here in Charleston, and you need someone local. You need someone with local connections, someone like Andrew who knows this local flood insurance market, knows the twists and turns. I'm going to plug a little bit. I have seen Andrew, because of his awareness and knowledge of the local market, take people that think that they're walking into $2,000 flood insurance policies, identify small twists, small tweaks that they need to do on an elevation certificate, and all of a sudden they're walking away with a $500 flood insurance policy. If you call AIM, 123lender.com or somebody that is not local, some outside bank that you just go on and you go to bankrate.com and you just find some company that, who knows where they are. They don't know Andrew. They don't know you. They don't know a local real estate attorney who lives in the neighborhood that you're about to buy in.
As an example, I had a client that closed just a few weeks ago. They were from out of town. They wanted to use their local bank from where they were from in Ohio. I was completely fine with that. However, that bank also referred an insurance agent to them. It was a local Ohio insurance agency. That's fine if they want to work with somebody from Ohio, but here's what you're talking about. They were providing them quotes that did not offer wind and hail coverage. So they were getting quotes that were, $500-$600, and my quotes were coming in at $2,500. And there was a big difference in them, and they were getting ready to take the offer of $600, and there was no wind and hail coverage. Had that have gone to closing, that closing would not have occurred, and then it would have delayed everything, not just for those buyers, but also for the seller.
Yeah. So what Andrew's saying there is when you're in a wind and hail zone, there's no option. You have to have wind and hail insurance. Otherwise, you're not going to get a mortgage. The asset that is not properly secured if it's not properly insured. And that in that situation, you have a buyer who thinks they're saving money. They think they're comparing apples to apples with a insurance company from a completely different time zone, and they're going to get to closing, and the lender doesn't look at that insurance until the day it gets bound, which happens to be the day before closing. And well, guess what? We don't have insurance. We don't have a closing. And now it just so happens it was Friday afternoon when it got discovered, and their life was in a moving truck, and they are now not closing until Monday or Tuesday. And the seller of that house that they were buying, well, they had to buy a house that afternoon too so that they can move their family. And things snowball like that all the time.
Absolutely.
And you get a local team who knows the industry, who knows this market. I can't stress how important that is, especially in something as challenging and complicated as real estate. So there's two things we talked about. The first one is time. Get started, get planning, reach out to someone early. The second thing we talked about is local. Stay local. When you talk to that real estate agent, we know you start talking to real estate agents sometimes 14, 15 months prior to when you actually pull the trigger on a house. That's the average time that a customer starts thinking about real estate until the time that they actually pull the trigger. It's 14 months. If you're thinking about that house 14 months, it's time for you to start thinking about the other things in that house. It's time to start planning for the mortgage. It's time to start planning for that move. There's too many things that hang in the balance, and I'm telling you, you give me and a team and a network like I have time, and you will see a smooth, effortless process. The third thing I'd like to recommend is go with a company or an individual for your mortgage that has more than one person at your disposal. For example, I have a lending team of 4 people, excluding myself, that are driven for every step of the process. Everybody has a role. Everybody has a responsibility. When there are so many things and so many requirements that it takes to get a mortgage, just needing to lean on one person and having one point of contact can really be a challenge. Because I promise you that when the other lenders that you talk to, they're going to have other things going on. And you want to have those 2 or 3 phone numbers in your Rolodex to be able to fall back on. I have the fortunate to do enough business in this market to have built a team like that to be able to support my clients, to be able to support my real estate agent partners who need someone who's going to be attentive like that. And so that's the third thing I would recommend is someone that has a team. It's a very similar concept to a real estate agent. I mean, real estate agents are out there trying to grow their business, and they're developing teams. When you have a real estate agent team and they've got clearly defined roles and different people focusing on different aspects of that transaction, it just goes better. It just goes smoother. And so that's what I would recommend is go with someone who's got a good track record and who's got a team that's going to be there to support you. If you have any questions for me ever during the show, after the show, please feel free to reach out to me at 843-300-7870. You can also find me at my website at www.lowcountrylending.com. And we're here on 1250 WTMA, the Big Talker. And we'll be back after the break. We're going to talk a little bit more with Andrew about some changes that are coming up in flood insurance. So please stand by.
Bill Sandvig has more Mortgage Matters straight ahead on 1250 WTMA, the Big Talker. WTMA. This is Mortgage Matters on 1250 WTMA. From Movement Mortgage, here's Bill Sandvig.
This is Bill Sandvig. We're back on 1250 WTMA, the Big Talker, and this is Mortgage Matter. We are talking about all things mortgage, finance, insurance, real estate in the Charleston Low Country, and we appreciate you joining us this morning. The last segment, we talked a lot about how important it is, how to overcome some of the myths about lending, and how to make that mortgage process smooth. And the first thing we talked about was time. Get started early, get planning early. The second one, and I think really probably the most important one, is reach out to local partners, a group of people who are established in the local community, in the Low Country, that know the industry, and that have a local team and network to support. I mean, you've got myself. I have plenty of real estate partners, an excellent insurance and property and casualty partner, and Andrew Muller with Mappus Insurance, who's in the studio with me today. Nick Pavia, a local financial advisor and life insurance and financial planning with Commonwealth Financial Group. He can be reached at commonwealthfinancialfg.com if you ever have any questions to him. Also, local real estate attorneys like Jimmy Fody, who's located right here, owns Fody Law. You could find his contact information at FodyLaw.com. And partners like that. Andrew, could you tell everyone where you could be reached again?
Absolutely. Well, the best resource is our website, which is mappusinsurance.com, MAPPUS, insurance spelled out, or you can reach us at 843-763-4200.
Thank you. I want to spend the next segment talking about some big changes that are coming up, that have come up, that continue to come up in the flood insurance arena. And I have heard you talk about flood insurance many times. I probably 98% of the knowledge that I know about flood insurance probably comes directly from you. So if you've been wrong, I've been wrong for the last year, and I know that's not the case. So I'm excited to have you on the show. Tell us what's been going on.
Sure. So obviously, as everyone starts looking at real estate, especially here in the Low Country, flood insurance is a big issue. There's over the last few years, there have been many sweeping changes from the federal level with the National Flood Insurance Program, which started with the Biggert Waters Flood Insurance Reform Act.
Yeah.
And then that was partially replaced with the Homeowners Flood Insurance Affordability Act of 2014. Well, between both of those bills that were passed through Congress, starting this April 1st, so in just a couple days, there are some new laws that go into place that will affect every single homeowner that has a flood policy. That's everyone. So if you have a flood policy, you will be affected by this, by the new laws that go into play April 1st.
I have an on-the-spot question for you. What percentage of the Charleston Tri-County area is in a flood zone? Do you have any feel for that?
There are, probably 6 months ago, I think there were about in an AE or a VE flood zone, so a higher hazard flood zone. I think there were around 12,000 flood policies in force.
Okay.
But there are certainly plenty of more homes that are in flood zones. They just might not have a flood policy in force.
Okay.
But that number, I'll have to get you a solid answer after the show on that.
I know it's pretty much all of the peninsula downtown. I mean, for the most part.
Well, no, there are certainly some pockets of lower hazard flood zones on the peninsula. But when you really think about it, obviously the coastal barrier islands are going to be probably the most significantly hit. If you're on a marsh or a wetland area, you're probably more likely in a higher hazard flood zone. But there are certainly many areas of the low country that you would not think or assume they would be in a higher hazard flood zone, but they are.
Okay.
There doesn't have to be water around for you to be in a higher hazard flood zone.
Right. I know I'm in a flood zone, and I mean, I'm not anywhere near the
You're nowhere near
coast,
water, but certainly you're in a flood zone, and so you're being, if you were to carry a mortgage, you'd be required to carry flood insurance.
Yeah. Okay. Sorry, I distracted you. Back to it.
All right. So some things going on 4/1, a very important date. First off, rate increases certainly are taking place. The rate increases vary depending on the flood zone you're in and your specific property. So it's really tough to say how your rates will increase. I would say homes built more recently are going to see very minimal increases in terms of a rate increase. Older properties, and specifically pre-firm properties, which in Charleston County that is built before 1974, those properties are going to see on average a 15% rate increase. Certainly it could be 5% or it could be up to 18%, but on average a 15% rate increase. So if you have an older property, you're going to start seeing some increases, and this is an annual increase. Other things that are happening
So an annual increase for how long?
Well, that's a great question. It's until you reach what's called the full risk rate. And so the next question is, what is the full risk rate?
You asked for me, thank you.
That's also a tough one to answer because every property is different. The only way you can find out what the full risk rate is for a specific property is by having an elevation certificate done. That's the only way.
So if someone's buying a house, they're going to buy a new home, and they have an elevation certificate, they can present that to you, and you'll almost have two numbers for them now. Here's what your premium is now, and then here's what your premium is headed to.
Correct. If it's a what's called pre-firm property, if you're being rated with the elevation certificate and it's a lower premium, then that's the premium we're going to go with, and that's where your premiums are going to stay, barring any minor increases. Okay. But certainly, some people I've seen where they're paying $1,500 to $2,000 now just for flood insurance, and then they're going to go buy this house, and then they get an elevation certificate done, and the elevation certificate says, well, if we rated it with this certificate, you would be paying $8,000. So just to give you an idea, your premiums are going to creep up until you reach that $8,000 figure.
Wow. Okay. And so that was 1974?
Correct.
In Charleston County?
Correct.
And it's a different number. It's in
Dorchester and Berkeley County. I always get it confused. It's 1982 and 1983. Okay. But there are many pre-firm homes that qualify for post-firm rates. So I don't want people to be scared thinking that you're going to have high flood insurance premiums. It's not the case for everyone, and every property is different. So you really have to have that elevation certificate.
Okay. So So we have the average annual premium increases that are coming for the prefab homes. What else?
So there's a new fee being assessed to all policies. If it's a primary property, so if you live there at least 51% of the year or more, then you're going to be charged what I think is minimal, $25 fee. If it's a non-primary, so if you live there less than 50% of the year, you will be charged with a $250 fee.
So that would be second homes and investment properties.
Absolutely. And if it's a pre-firm secondary or investment property, if you own a beach house that was built in 1970 on Isle of Palms, you could be experiencing, I mentioned a 15% increase on the rate. And for non-primary homes, it's a 25% increase in the rate plus a $250 fee. And that's not all.
Okay.
There's still another
Keep it
fee.
coming.
There's still another fee. So then there's another assessment for the reserve fund of 15%. And that's going to occur on every policy. So every policy is going to receive a 15% assessment, and it's of the base premium. And that's going to be an annual fee as well. So some policies could experience, from a percentage standpoint, a very high increase, but from a dollar standpoint, it might not be that much. Somebody might go from paying $450 to say $800, or from $1,500 to $2,000. It just really depends. Again, get an elevation certificate. I can't stress that enough.
So let me see if I got this right. I want to recap it. So for everyone across the board, there's going to be a 15% assessment. If you have a flood insurance policy, that 15% assessment's coming.
Correct.
If you're in a prefirm home, then you're looking at somewhere around a 15% annual increase if it's a primary residence, and a 25% annual increase if it's a second home or an investment property.
Correct, for non-primary. So it could be a commercial property as well.
Commercial property, yes. Okay.
Yeah.
And third, there's a $25 assessment fee, just a flat fee for everyone who has a flood policy in a primary residence, and a $250 fee for the commercial, the investment properties, and the second homes.
You are correct.
So for someone in a new construction home, because we got so much of that going on here in Charleston, they're in a flood zone. Typically, the most common flood zone I see is the AE.
Correct.
So, and that's right below X. So you're going from being not in a flood zone to the lowest risk, basically.
Yeah, I'd call it medium risk.
Medium risk. So it's the first level that's required, that the banks require flood insurance.
Correct.
So for a new home, AE, and it's a $300,000 house, typically what I see for flood insurance policies are $300 to $400.
Correct.
So pretty inexpensive. So for someone in that situation that's a primary residence, we might only be looking at the 15%, the $25. We're looking at
less than a $100 increase. Certainly not a lot.
Now, is that $70 next year going to be another $70 and then another $70?
No, it won't be. That $25 fee and that 15%, it's not accruing.
Because we're not getting that build up.
Correct. It's not accruing if it's being rated with an elevation certificate.
Now, if you're in one of the older homes, then you have the number that's growing.
Correct. You're going to have that 15% rate increase. And then the 15% assessment is based off of that accruing 15% rate increase.
Okay.
I know this is confusing.
Yeah, it's a lot of numbers.
If everyone, I have this written out very well in an article on our website, mappisinsurance.com. If you click at the top onto our blog section and you can search, there are many articles on flood insurance. And this specific topic is listed on there, and it highlights all of these changes. Okay,
well, thank you so much. We went a little bit over there, but I really think that's a lot of important stuff. I didn't want to stop that conversation. If you have any questions for me at all, I'm Bill Sandvig. I can be reached at 843-300-7870. This is Mortgage Matters on 1250 WTMA, the Big Talker, and we'll be right back.
Mortgage Matters continues next on Charleston's Big Talker, WTMA. Now, let's get back to Mortgage Matters on the Big Talker. From Movement Mortgage, here's Bill Sandvig.
We're back with Mortgage Matters, and I'm your host, Bill Sandvig. If you have any questions about anything mortgage-related, finance-related, insurance-related, please give me a call. You can reach out to me, 843-300-7870 is my cell phone. I'm happy to talk to you, address any questions you might have anytime during the week. And if I don't know the answer, I promise you I know an expert who does. I've got one of those experts here in the studio with me, Andrew Muller of Mappus Insurance. We've been talking about flood insurance and some of those pending changes that are coming that are going to dramatically and directly impact the local market, local real estate market here in the Low Country. We've also talked about mortgage myths. We talked about the common misconception that banks are no longer lending money, that people can't get a mortgage loan anymore these days. It's just not the case. We talked about some of the misconceptions that have led to that belief. I believe that it mostly hinges around the tightening of guidelines, the challenges that come with documenting a buyer. It's not that the banks aren't lending. It's just that the rules and requirements for documenting these loans have changed a little bit. We talked about how to overcome that. We talked about, number one, plan ahead. Reach out early. Reach out to an expert early. Reach out to a mortgage lender early. Someone like me, I can help you plan ahead. I don't care if it's a year and a half out. You might be surprised. You might give me a call and you say, "Hey, Bill, I'd like to know about what it's going to take for me to get to a mortgage because I got some credit history or some credit issues." You might be surprised. I might take a look at your credit situation and say, "You're ready to go. You don't have to wait for a year. You're ready now. The rates are down. The real estate market's hot. Prices are going up. You don't have to wait. Make that call. Find out the truth. Find out the answer." The other one is use local experts. Use people that have a team of people that know this market, know this industry. Like I said, if I don't have the answer or I don't have the service that you provide, the service you need, I promise you I've got a local person who does, a local person who knows this market, who's not going to steer you wrong, who's not going to set you up for failure. And some of the, Andrew, I want to go back to you. Sometimes people get so caught up in the almighty dollar that they miss the big picture.
Sure.
People come to me and they say, I'm looking to save another 50 cents on my mortgage payment, and this other guy is going to, 123mortgageloan.com is going to save me 50 cents on that mortgage payment. And I try to stress to them what they are headed down by going to some 1-800 hotline and thinking that they're doing the right thing for their family, and when they're going to expose themselves to a real bad customer service situation. You don't go into a Mercedes dealership and say, "Hey, I just checked out a Hyundai and I'd like to get this Mercedes for that price."
Yeah.
It just doesn't work that way. Mm-hmm. And that's how I kind of liken local experts, because, and I'm not saying local experts are more expensive even, but if you're going to go out and just hunt for the cheapest dime, I think you're going to miss something. I mean, especially in the insurance industry. Absolutely.
I mean, as we mentioned earlier, that example of the people moving down from Ohio going with the cheaper quote. And certainly, we want to get the best deal for the client, but we want to make sure that they're properly protecting their asset and protecting their family, because it's always too late when you find out after a claim happened that you don't have enough coverage or there's no coverage.
Yeah.
I used to be a claims adjuster, so I've seen it firsthand. I've had to tell people, there's no coverage here. And helping somebody understand what it is they're buying, educating them so they can make a knowledgeable decision on the insurance is very important, because insurance can be very much commoditized. I can't say it.
Yeah.
And whenever I sit down with a client and explain to them the difference between a hurricane deductible and a wind and hail deductible, or this quote has earthquake coverage, this one doesn't, or you have an animal, you have a dog, this quote that you received from this other agency doesn't provide animal liability coverage. And so all of these things factor into the pricing and how you're covered, but it's so important. If you don't want some of those, that's fine, but at least you know it now and you can make a knowledgeable decision. But you really just, again, with what you were saying, working with that local expert in the local market and what coverages you need versus just, well, this quote's cheaper, it really goes so much further. And again, we want to get you the best deal, but we also want to make sure you're protected.
Well, tell everyone one more time where they can find you, Andrew.
Sure. Our website is going to be the best resource, which is mappusinsurance.com, MAPPUS insurance.com, or 763-4200.
Andrew, thank you so much for coming on the show again. I always enjoy talking with you. I always learn something every time. If you want to reach me after the show, please call my cell phone. I'm Bill Sandvig, 843-300-7870. You can also find me on my website at www.lowcountrylending.com. I'm the market leader for the South Carolina coast for Movement Mortgage, the fastest growing mortgage company in the country for the last 5 years, and currently the number one purchase mortgage lender, non-banking institution in the Low Country. Thanks again. This is Mortgage Matters. We'll see you next week.
You've been listening to Mortgage Matters with Bill Sandvig from Movement Mortgage. Call Bill for your mortgage needs at 843-300-7870. That's 843-300-7870. Listen again next week at this time for another edition of Mortgage Matters with Bill Sandvig on 1250 WTMA.